We will continue on our next topic, which is regarding on management. Um, this is a very essential topic that we need to cover because if we doesn't manage our risks, we will exposing our portfolio to a very great risk. And a lot of people who are, especially traders, who are beginners, they doesn't know and there's sometimes ignorance regarding on risk management. And at the end of the day, all right, it's not take a long time for them to for their account to be wiped off because of they have no risk management in place. All right, if you think about trading, right, if you get into trading, risk management is one of the essential knowledge that you need to learn, that you need to practice. All right, uh, making money in the stock market is not easy. All right, it's not easy. Although we have a very high probability trading strategy, but if we can make money with consistency, all right, yearly by yearly or monthly by monthly, with consistency, all right, it's more than enough. All right, if we could not really too attached with our trades. All right, most of people, if they most of people when they are trading, they doesn't have risk management in place, and because of this they have really uh, emotional attachment on their trades, and this resulting that they could not make proper decision in the market. All right, they they have emotional attachment. The size is too big, so one bit or two bits movement of price make a lot of difference, not only in terms of reward, right, but in terms of the exposing of yourself to unnecessary risks. All right, so actually when you are trading, you want to expose your trades in equal risk with low risk as possible. All right, most of people when they are trading, they have this risk management out. They want to get rich very quickly. By the end of the day, 90% of them, 99% of them get get broke quick, right? Get broke quick if you doesn't follow your risk management. So this risk management is really, really important. All right, and it is not really an interesting topic to discuss, but it is really necessary for traders. Uh, and a lot of people pays a very expensive knowledge in trading because they doesn't put into practice on their risk management. Now, as far as we learned before that, risk management is second element that constitute to trading success. All right, the number one is the psychology. The second one is risk management. The third and the fourth one is regarding on fundamental on tech and technical analysis. And trading and risk management is the second element to master, all right, in trading and investing. You could not afford not to learn risk management. All right, what you want to do is you want to survive in the markets. All right, you're not gonna know when is the next bull runs. You're not gonna know when is the most bearish moment in your trades. So what you're gonna do is you want to have a system, have a risk management profile that help you uh, that can help you to make money in the good times, enhance and also protect you from any major downside, all right, during the bad times. So there is fixed amount of risk management that you can implement, all right, but today we will talk about how do you control your risk management. Right? Con- Risk management is all about helping an individual to survive in the markets by not exposing your portfolio with too much unnecessary risk. All right. Your goal is to keep risk under control and to minimize losses and survive at the end of the day and survive with a total positive portfolio. When you talk about risk management, it's also about asset allocation. All right, it's all about asset allocation. How do you balance your risk portfolio within financial equities? Right, as far as we know that stock market is also a very volatile market, and there is also a very many vehicles that is more volatile, and there is also a vehicle that's considered to be safe to invest. All right, so what you're going to do is you want to balance your portfolio within these equities so that you are not expose your investment in unnecessarily big risk or in unnecessary in only one investment vehicle, right? As far as we know, every financial equities have different volatility and risk profile. All right, you do not want to put everything in one particular vehicle. All right, especially when you invest in a very large capital, you want to segregate your risk orderly so that you are not exposing to unnecessary risk. And at the end of the day, you know that you're gonna make money. All right. So this is the objective of risk management. And when you talk about risk management, it's all about produce expectancy. All right. When you invest a portfolio and you are following through a kind of system or a kind of strategy that you know you're going to produce this kind amount of money during this some certain period of time. All right. When and you are already knows this because of you already knows what the strategy or the system are capable to do. All right. Of course, you're not gonna have same results every time, every year, but when you follow a certain system, you know you're gonna make money every year, right? And you are not exposing and you are not wiping out your portfolio in a single trade. All right. So you do not want this to happen. And many of traders again learn expensive experience because they have no risk management in place. All right. And when you talk about risk management, is also regarding on producing consistency, right? Result in the market. And although risk management topic um, right, consists of a large topic. So today we're going to talk about a little bit detail. In particular, we want to talk about your trades, right? How do you handle your trades and when to get in and also when to get out when you are wrong. All right, we are not talking in a big context, but we are talking based on your trades. All right, your trades. So this is very crucial. And risk management is actually also about how much the amount of shares to buy and sell. All right, and sell. What it means by this is that is about the position sizing. It's about the position sizing of your account on how much shares that you need to buy and how much shares that you need to sell. All right, if the trade's going again going with your direction, right? And risk management is also about stop loss, where to get out when you are wrong. So this action, all right, this action is very relatable to your strategy, right? If you don't have a very good strategy in place, so you actually uh, or less knowledge on where to get out. And this, when you have this less knowledge on where to get out, you have less confidence. You tend to be panic in your trades, and at the end of the day, you not implement your risk management. So if you have a good strategy that will be discussed in this topic or have been discussed in this topic, you will know that where to get in and where to get out. All right, exactly. So that you didn't hesitate when to take action, when to get out. All right, from your trades if the stock price going against you. All right, everything you invest, all right, it comes with risk that is proportional to return that you are able to get. Right, you have to remember this is that before you invest, always got your you have to take responsibility of this, and you have to be aware that you always got you have to calculate and you have to know your trading amount that you are willing to risk. All right, simple to say, if the amount is losing is too big, all right, you are not allowed to put that amount. All right, if you are comfortable of losing $500, all right, put that amount as your risk profile, right? So this is something that you need to decide before you enter any trade. If you invest without knowing this, you'll be losing in the market because you didn't know how to take action. You panic and target when the stock goes against your direction. And remember that we want to make money safely, and we want to be consistent. You want to be consistent in the market. That's how you make money over and over again. All right, and not be wiped off with with a single trade. All right, and I'm a former stockbroker, so I see a lot of traders, or I see a lot of beginners wipe off their account because of they didn't put the risk management in place. Either they know about it or they just unknowledgeable about risk management. They think that the hunch is correct. They feel that the stock gonna be rally, right? And suddenly, right, the stock going in against their directions, and all right, they couldn't put action, right? They couldn't put any action on stopping out or minimize the loss accordingly. And all right, when you talk about risk management, you have to determine where to put your stop loss correct. All right, and measure. It's not only about stop loss, but it's about measure hit target for uptrend and let your profit run. All right. So what I mean by this is you must have a take profit strategy accordingly, and while allowing this take profit uh, to be done from time to time, you want to let the profit run. You want to let your profit run from time to time. All right, so you don't want to take all of your money at once, but actually you want to let your profit run from time to time. So this is how you make money a lot in the market, by letting your profit run. All right, so if you have a strategy that is balanced between take profit and allow your trades your profit to run, you will have an average amount of, for example, like losing and profits. All right. So at the end of the day, you might be break even or you might be profitable a little bit. All right. At the end of the day, but the important thing is that you do not want to be losing in the market. All right. You want to have a strategy that minimize your loss accordingly. And when you implement a kind of strategy, you are at the end of the day you are able to make money from the market. Believe me, making money in the market is uh, is steady. Slow and steady is the best. All right, it's not the best way to make money in the market is not at any one particular trade and you lose more in the next trade. All right. So the best way to make money in the market is that you make money in and out of the market every year, uh, year by year. All right. So that's how you win the stock market game. So what you want to know is that when you trade safely, you want to trade within your budget. All right. You don't want to trade using any margins. All right. And I have been working as a stockbroker before, and I know a lot of people, they trades, they have their account wiped off because of, and not even wiped off, they are in debt because of they are using budget, they're using margin provided by the broker. If you are using margin from the broker or uh, any cash help, make sure that you are able to pay it again, right? You are able to pay uh, the money if something happen. All right. So what I mean by this is that you must trade within your budget. All right. You do not uh, use any borrowings or debts to invest. Right. So uh, this is something that is very crucial, because when mostly beginners, when they are starting their career in stock trading, they are delusional. All right, they are overconfident, they use all their guts, and they use more than they could suppose to use, and this making them uh, if making them losing money if they are uh, get into a wrong path. All right, if they do not put their risk management in place, so when the times, when the stock goes against them, they are unable to accept these losses, and hence they are unable to take action or implement their stop loss. All right, this is very crucial. And again, consistency is that you having a right you having a strategy that is producing positive results every month or every year. And then while you have this protection system, you have a strategy of winning big by letting your profit run. All right. And believe me, in 5 years of trading, all right, I'm also be once a beginner. So I want uh, win every time, and I want win big. And all right, and this has cost me, and for example, like a few years break even. All right, and if you have a strategy uh, and you implement it accordingly, and you have a positive portfolio, uh, maybe in between 3 to 4 months, it's good enough. All right, don't try to make money too quick in the market. All right, because when you make money too quick, you can lose too quick too. All right, you don't want this to happen. You want uh, at the end of the day, you have a very positive portfolio. All right, you can even have 30% or more than 50% of your total account equity compounded every year. So this is possible uh, if you are following uh, a system, a success system, and you are not greedy in the market by putting all your cash into one particular trade because of you want to win big at one time. All right, you don't want this to be happen.